Hi, and welcome to Trading Live Online. This is our YouTube video series, and we post short videos here for trading education. My name is Leslie Juflis. I'm the owner and founder of Trading Live Online, and I also authored a book with Larry Pesavento called Trade What You See: How to Profit from Pattern Recognition. And I teach traders skills in trading using pattern recognition and classic technical analysis. So most of the setups that you'll see on my videos are straight from what I teach on the website. So this article was posted today on stockcharts.com that I wrote. It is titled Index Divergences, Resting or Correction. As most of you know, the Nasdaq has been leading the market since the market bottomed in about mid-March 2020 this year after a very steep correction in February. Well, the S&P 500 and the Dow Jones Industrial have yet to reach new highs, although the S&P 500, as we'll see in just a minute, on one of the charts is just poking up to the new high area. There are some index divergences, however, and that's what I wrote about in the article, and that's what we're going to talk about with this YouTube video. We're going to start by looking at a couple of sentiment indicators. And this particular site, if you would like to come to my website, Trading Live Online, you'll find the whole article posted on the home page that you can read. In the article, you'll find the link that will take you to these sentiment indicators. I don't look at them every day, but when the market is in a position of getting either to new highs, it's might be an overbought state, or it's down at extreme lows and it's in an oversold state, I'll start to take a look at these sentiment indicators, and it helps me with the technical analysis. The one that we're looking at right here is just a very simple meter, red to green, and we've got the extremes on both sides. Now, when markets get to highs and they start to get into an extreme green, the red area, or excuse me, the green area that you see, it doesn't always mean that the market is just going to turn over from that point. Sometimes they do, but sometimes the tops and the highs in markets can take a little bit longer process to play out. But it is good to, again, look at this and get an idea of where it is. Let's look at a couple of more. This is just a chart, a simple line showing us where the extremes in the fear and greed have been over time. You can see the upper part is the extreme greed. This is when the market starts to get into very overbought conditions, and the extreme fear in the very oversold conditions. Just as an example, if we look down here at the lows in March 2020, you can see how low that extreme fear reading got before the market started the uptrend that is currently still in. And conversely, on the extreme greed sides, just about where we are now. Of course, it can come higher, but you can see that if we go back in time a little bit, when some of the sell-offs started, this indicator was right around the highs that it is now. You can see this one here back in 2018 up just a bit higher, and here, and of course these ones up here from late 2019 and early 2020 are very extreme. One of the other indicators that we can look at is the McClellan Volume Summation Index, and that's also on this same site. And this is telling us in measuring the advancing and declining volume on the New York Stock Exchange. And if we just simply look at the graph, again, we can see that this is up towards the higher end of its range, and it's indicating that the market breadth is still strong, but it is getting up and has been staying up in this upper end of the range. So again, that's a very high sentiment reading. This chart is just a snapshot of a daily chart of the Nasdaq futures. And what I'm showing you here is that the Nasdaq has been responding to right around these 127 extensions. And what that is if we take the length of a swing where I have an X marked here down to the bottom of the swing, and we take that length and we multiply it by 1.27, which is a Fibonacci ratio. We add it to the low. That gives us a projection above that X point. This is a pretty common Fibonacci ratio for these extensions, and this is a pattern that I do use in trading and my analysis. And you can see here how the Nasdaq responded with a retracement after hitting this 127. Well, it's now currently up around the next 127, taking the length of this swing from high to low, multiplying by 1.27 and projecting to the upside. So we'll see in the next couple of days if there is a reaction from this particular extension number. If not, then this is forming another type of a pattern. The RSI on this chart, you can see here, this is the last highs where this red arrow is of the RSI, and you can see that it's been declining as the market's been coming up. It's so far been making lower highs. Now if the market does continue up from here and the RSI is able to strengthen and come up, and the S&P has broken out to the upside, then we may see this uptrend intact. But if the price continues up and this RSI is not able to climb, that's another sign that we're seeing some weakness, underlying weakness in the market. This is just a look at an intraday chart of the Nasdaq, where we're looking at a little bit different high and low that I've used for the extension, but it's coming up into the same area. This morning's trading off of this 127 on the intraday chart, found resistance and did trade down from there. It did come back to the upside and is currently trading just right at and around that 127. And again, the RSI, once it reached the 127, was showing a divergence at that point. So here we're looking at a chart, a daily chart of the S&P 500 E-mini, the futures, and you can see that we are just right up, almost up at the old highs from February. But remember, the Nasdaq exceeded these highs quite a while ago and has been the leader in the markets. The S&P has yet to make a new high. So the question right now is the market, is it just resting up here? The last few days we've had fairly small ranges in the S&P. Is it resting before it makes an attempt to break through there, or is this going to be a type of a double top and we see more of a correction from there? Well, nobody ever knows for sure exactly what price will do, but what we need to do as technicians is learn to spot the divergences, weakness, and strength in the market so that we can trade accordingly with that. So right here I've got the RSI, which is the relative strength index, and this is a great indicator to use to determine strength or weakness. Right now, where the S&P is at, the RSI again has not exceeded this high. So if it does exceed this high, and it is able to break out to the upside. For a strong breakout, we want to see good sized bars out of there, and we want to see the RSI continue up, showing us strength, and we would like to see all of the indexes going in that same direction. We also want to know what a failure would look like. Well, a failure is going to get strong price rejection, and that means that it gets up to this area. It might even poke through it, but then immediately turns to the downside, and those moves are very fast and very, very swift, and they will start just breaking support areas very, very easily. The thing with those types of moves and why it's good to be aware of them and know how to track them is because, first of all, you don't want to get stuck in a market that is starting to avalanche to the downside. You don't want to be the last person to figure out, such as on the way down in February, that this type of a landslide is occurring. And so, one of the strengths and the skills that I teach traders is how to spot those types of movements. As the S&P 500 and the Nasdaq both came up to the highs of the day today, the S&P also had this 127 pattern and it's just testing those February highs. And same as the Nasdaq, the RSI on this intraday chart was turning to the downside. So again, I'd like to reiterate, if the S&P does come up and make a new high, we want to watch some type of momentum indicator to see if that's following that price movement to the upside. The last chart in this video is the Dow Jones Industrial. This market has been lagging the S&P and the Nasdaq. The Nasdaq is up around this area. We know the S&P is right, very close to the highs from February, but look at the Dow Jones Industrial. It is lagging behind. It has not even filled the gap yet from February when the market started the downside. It had all of the indexes had a large gap to the downside. The Nasdaq has filled it and exceeded it, and the S&P has filled this gap and is now currently trading above it. Coming back below it would be very negative for the S&P, but the Dow needs to get going to the upside in order to catch up to the other indexes. But currently there are some sell patterns. This is called this is a A, B, C, D swing, where you have one leg up, you have a retracement, and then another leg of about equal lengths, even though they can get, the CD leg can be longer than the first leg up, and that's where this line here and this line here are showing where those extensions might be, and you can see they're right into the gap area. So the Dow Jones Industrial has a lot of work to do in order to catch up. This area here should be a resistance area for the market. So far it's not been able to get there. The RSI, I've got a question mark on this as whether this RSI will turn up if prices exceed the last highs of the last few days, or based on these patterns, is the market ready for a correction to the downside? So I hope you've learned something from this video, a few tips on watching some price behavior and market behavior, and please feel free to come visit Trading Live online, and feel free to send me an email. So best wishes for successful trading.